today, households have nowhere to hide. Hello again, it's Martin North from Digital Finance Analytics, one latest posts covering finance and property news. Yesterday, I went through the latest GDP outturn for Australia and underscored the per capita recession that is now in play across the country. Now others are seeing the same, with CBA's economics team tipping that Australia will plunge deeper into a per capita recession as aggregate GDP growth falls below 1% while population growth remains above 2%. They say that real GDP per capita declined by 0.3% in the quarter, following the same decline in the first quarter of 2023, and real GDP per capita is 0.6% below its peak in the fourth quarter of 2022 and is 0.3% lower over the year. Population growth has been much stronger than anticipated by policymakers. Working age population has increased by 2% in the year to July, and the increase in population is supporting overall GDP, but the economy is contracting on a per capita basis, they say. We continue to expect the pace of growth of the Australian economy to slow from here under the weight of restrictive interest rates. We expect GDP growth to slow below 1% in the fourth quarter of 23, before slowly recovering in 2024, the timing of which will depend on the timing of the RBA's rate cut cycle. As expected, the per capita recession has been caused by a large reduction in household consumption, which is the main driver of the economy. Households are struggling under the weight of soaring mortgage costs, rising rents, and negative real wage growth. Household budgets are under pressure after inflation and rising interest rates, they say. Household consumption growth continues to ease, down to just 0.1% in the quarter from 0.3%, which was revised up from 0.2% over the quarter previously. But per capita household spending declined again. The population grew by 0.7% in the quarter, while total consumption rose by just 0.1%. Discretionary spending also fell by 0.5% this time, the third consecutive quarterly decline. They say household debt servicing costs continue to increase in dollar terms and as a share of household disposable income. Dwelling interest payments rose by a further 10.9% across the quarter and is up a massive 129.4% from its pandemic lows. The RBA last hiked the cash rate in June, but the lag on the pass-through to variable rate mortgage repayments and also the fixed rate expiry schedule means that debt costs will continue to rise despite the RBA being on hold. Debt servicing costs as a share of income will reach record highs by the end of this year, they say. And they conclude, we expect the consumer to weaken further over the second half of 2023 as the impact of higher interest rates continues to bite, and the delays in transmission to variable rate mortgages and the roll-off of fixed rate mortgages means the impact will continue to be felt into 2024. Now this is important, of course, because it shows you that there are lags in the system, and even if the RBA keeps rates where they currently are, the pressure on households will continue to get more intense over the next few months. And as we saw in the data yesterday, real wage growth is actually easing back now, so there is really nowhere to hide, particularly those renting and also those with large mortgages. And it's worth remembering that a lot of those who bought in the last 2 or 3 years were younger first-time buyers, frankly bribed into the market thanks to government policy, and are now left stranded with higher rates, which is why, of course, mortgage stress continues to build in so many of those areas. And this really does underscore the stupidity of current settings, with migration so high that it effectively is managing to prop up overall GDP, but the real measure, GDP per capita, continues to grind lower, and that is grinding households into the dust. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.